There are three monster stocks that are quietly setting up for a major run into 2026. One has just 10 times forward earnings. Another is set to double revenue over the next 12 months. And a third just crushed earnings and launched new AI tools that are set to dominate the enterprise world. In this video, I'm breaking down the fundamentals and the key catalysts, as well as show you the exact trades and how to put them on the trading platform. Hey guys, be sure and like and subscribe down below. It really helps out the channel when you like the video. I appreciate it very much. YouTube shoots the video out to more people and really appreciate it, each and every one of you. You're certainly welcome to subscribe as well. And there's a Discord that I'm going to share with you right now that's new. We've got quite a few new members. We've got 82 members, and it just opened up recently. So what we do on this Discord is I'll share my trades with you right here on the OTM Option Trading Mastery Trades. Here you can see ServiceNow put credit spread just put on. I give you the exact numbers and where I was filled. I even show you the trade, what I like about it, and the key catalyst moving forward, and even the risk. So if you want to see all my trades, join the Discord. There's a link down below in the pinned comment, and we welcome you. You're also welcome to show your trades. I see Sharammer showed his, Stephanie, Alex. So we're getting some good participation. And then there's a chat here as well. You can see Harry Trades, Sharammer, a lot of back and forth. So we help each other grow the our investment accounts and portfolios. Let's start with the digital money comeback story. This might be the most ignored stock in the market right now. PayPal. Digital payments, e-commerce, checkout, Venmo, buy now, pay later, and crypto wallets. That's what they do. They've got 270 million users, millions of merchants, and a real network effect. This isn't a startup. This is infrastructure, and yet it trades at only 10 times earnings, forward earnings. That's cheaper than the banks, cheaper than the value stocks for a global payments platform tied to AI and digital wallets. The new CEO, Alex Chris, is cutting costs while still investing in growth, and we're already seeing results. Q3 earnings beat expectations. Revenue is up 7% year over year. He raised guidance. Operating efficiency is improving. And why do I like it? Well, digital payments are set to grow double digits over the next 5 years, and PayPal is positioned across every major trend. If you listen to the conference call, which I did, you can hear the confidence in the CEO, Alex Chris's voice. E-commerce checkout, mobile payments, one-click branded checkout, Venmo monetization, that's grown 45%. And buy now, pay later, that's another trend that he talks about in the conference call, and 20% growth in buy now, pay later. Crypto and digital wallets, there's a global shift, and PayPal allows this. And one big thing, AI-driven transaction margins, they're killing it. And here's what Wall Street hasn't even priced in yet. Their partnership with OpenAI and ChatGPT. They're building a wallet integration directly into ChatGPT. They've done it. And as people shop, it flows directly through there, connects to PayPal, and boom, they've got a sale. It's unbelievable. It's huge. And there's going to be others that do it as well. But being first is normally the best position to be in. So some of the key catalysts for 2026 for PayPal, well, the AI wallet integration. And they're going to get higher margins per transaction with that. More merchants plus more users equals network flywheel. Branded checkout expansion. Pay with PayPal or Venmo all in one click. So they make it really easy for the consumer. And they offer multiple ways to pay, which is what people are looking for. The Venmo monetization, it's really growing. It's over 40%. They've got cost reduction, improving earnings per share. The CEO talks about that. And forward guidance for 2026, there's double-digit growth possible. All right, guys, if we look here on Yahoo Finance, we can see the stock is price right now is $61. And you can see they've got a target of $82. So that's a huge upside. What is 25% upside from here? But you can see if we look back over the last year, it was up at the $90 range, which is really where it should be right now. And it's going to be moving higher. But it's down. That's a 30% discount from where it was at. So it's on sale right now. If we go to the statistics page, you can look at the numbers and look at this forward PE of 10. Super, super low. And I've done my base case numbers for it. I punch in, actually, if you go right here, if we scroll down and we look at this revenue, trailing 12 months, $32.86 billion, and net income $4.92 billion. I punched that right into my base case numbers, 32 and 4.9, and then the outstanding shares. You can get that all off Yahoo. We come up with a 1 year target price of 142, where it should be trading. So severely undervalued, 158 in year 2 and 176 in year 3. If you want this base case number, the 3-year price projection spreadsheet, just put in price projection spreadsheet in the comments and I'll send it to you completely free. Now, if we go and look at the analysis page, you can see they beat earnings the last 4 quarters in a row. If we look at the revenue and earnings increasing year over year. And their growth estimates, conservative, high single digits, 9. But hey, I'll take that all day long for this. It's basically a value stock where it's trading at now. Now, if we go to the Tasty Trade trading platform, my favorite for trading options, there's a link down below. Check it out. Benefits if you go through my link. It's the most intuitive for trading options. I've got 3 poor man's covered calls on right here. So I've got 3 leaps options deep in the money, or they're not in the money anymore because of the drop. Actually, one is the 60. And then I've sold 3 calls against it. So that's the beauty of options. You can make money if it pulls back as well. And then buy stocks when they're on sale. So if we go to the trade page, if I was to put this on right now, I would go to the trade page. We're going to go to the regular. I like to trade the regular options change. So you just click regular here because they're a little bit more liquid. But we can go out to the December and click on the 60, $12.90. We've got calls on the left, puts on the right, and we want to buy the ask, $12.90, mid price $12.50. Now, I can check out the next option chain by just hitting this time button. Boom. And it's only 12. It's the same price. So why not go out 414 days to expiration? More time, since we're buying, is beneficial. We go to the curve mode, analysis, and you can see as the stock goes up in price, we make money just like holding the stock outright. So we can triple our money if it gets up to 130, where I expect and where I think it should be trading. But that's the beauty of options. And then what we can do is we can sell at the same time, a short call against it. I would open up the January chain, and I would go out to the 67 and sell. So to sell a call against it out of the money, we click on the sell here at the 67.5. So it's the 27 delta. So that would give us basically a 73. So it's 1 minus 27, 73% probability of profit on this short call that it expires within this. We're at the 50 days to expiration. I like to go around 30 to 45 days, closest to 45 days, and that's this 50-day expiration. We click on that. We immediately collect $1.17, which is $117 since one option contract controls 100 shares of stock. So that brings our cost down to $11.31 or $1,131. Now we're controlling 100 shares of stock with $1,131. If we wanted to buy 100 shares of stock outright, it would be $61.83 times 100, or 6,183. So quite a bit less. And we can do this every month on the short call side and sell a call every month and eventually pay that off and own it for basically 100 shares of stock for free is the way that I look at it in theory. So that's my favorite trade for the PayPal right now, is the poor man's covered call. Actually, in the Discord, I put the exact trade that I just put on Friday, and it's on the Discord. So again, it's completely free right now. It's not always going to be, but you're free for life if you join. So check that out. All right, guys, we've talked about this one quite a bit. It's the AI sleeping giant. I don't know why it's out of favor right now, but it's probably the most misunderstood in the market right now. Not because it's failing, it's winning quietly, and Wall Street isn't even ready for what's coming. It's AMD. AMD builds CPUs, GPUs, data center chips, AI accelerators, and server solutions. They compete directly with NVIDIA, but at a fraction of the valuation. They just reported $9.6 billion in revenue, up 36% year over year. And the key, AI demand is just starting to hit the numbers, not fully priced in, not even close. AMD's growth is really accelerating right now. Data center plus AI revenue was up 73%. Client and gaming both grew as well. The MI350 chips began volume shipments, and MI400 is next in line. It could rival NVIDIA's NVL72 rack servers. OpenAI remains a committed partner. Xilinx and ZT Systems acquisitions are now starting to kick in. And here's what most analysts don't even see yet. If revenue hits 50% plus growth over the next 12 to 24 months, the stock could re-rate entirely, possibly to $300 plus over time. So the real reasons that I like it are the 36% year over year revenue growth. It's already happened. 2026 estimates show 41% revenue growth. Forward PE is 29 to 30. China export restrictions were the only reason they missed earnings recently. And the MI400 Helios rack server is set to launch in 2026. This is a huge catalyst. The AI computing wave is multi-year. It's not just a quarterly trend. So the analysts have the target price 1 year of $282. It's trading at $214 right now. You can look at the 1 year chart. It was up to $262, dropped back down to $214. So it is definitely on sale right now. If you look at the analysis page, you can see they beat earnings. They missed in Q2 only due to China export restrictions. So that was kind of a fluke. Nothing wrong with the business at all. The revenue and earnings keep growing consistently. You can see the trend there. Growth estimates 61% next year. And we're just getting the numbers in for MI350 and MI400s coming in 2026. So that's really going to help them kill it. If we go to the AMD on the Tasty Trade platform, you can see I've got 2 poor man's covered calls with 2 leaps and 2 short calls at 250 sold against it. And then I've got a 210, 200 put credit spread. But I really like both of those trades. What I would do for the put credit spread, if I was going to do that, actually, let me show you real quick on the platform, the fundamentals, the financials. You can see it's unbelievable. But you can see revenue, net income, annual. You can see the balance sheet. And they've got good margins as well, 48%. Not bad for a chip stock. And, yeah, we can see that chart and the pullback recently. So it is on sale right now. So if we go back to the trade page, we can do a put spread like I have on 200, 190. I think that's the one I've got on. It's on the Discord. You can check that out. We can collect $3.15. So that's 1/3 the width of the strike. And we can do that in the 50 days to expiration, January 16th. So that's a trade I like. And then I also like the poor man's covered call. And I'm in September, 295 days. You might want to go out to December if you're going to keep it long term. You can buy that 210 right now for $53.80 versus $214. So instead of paying $21,400, you can control that 100 shares with $5,380. We go right in the middle. Let's see. We can go down to 47 if we go to the September. Yeah, it depends on how long you're going to keep it, but I like to go around a year. So we can go to the 47, 46.80. Close that up. I don't normally keep them a full year. And then we could sell that January call against it. So we could sell the 250 call and collect $5.65. So that's $565. We could do that every month and pay this thing off in 9 months. As soon as we hit this 565, you'll see the price drop by that amount. And we're at $4,107. We hit review and send and place the trade. All right, this next one is the AI Enterprise Powerhouse, Now, ticker NOW, ServiceNow. These guys aren't flashy, but it might be one of the most reliable compounders in the entire market. Everyone's chasing hype, but this company's just executing quarter after quarter. ServiceNow builds cloud software that automates workflows across IT, HR, customer service, finance, and government. It started as an IT tool, but now it's becoming the operating system for the modern enterprise and companies. Think of ServiceNow as the Microsoft of enterprise workflows, but with AI built deeper into its core products. The numbers really tell the story. Revenue's up 22%. EPS beat by 14%. The operating margin is at 31%. Free cash flow margin at 34%. So numbers-wise, they're just killing it. You listen to the conference call. You see the CEO on CNBC all the time. He is extremely confident. I'm confident that their numbers are going to continue to kill it quarter over quarter. The remaining performance obligations, RPO, is up 20% year over year. So that's future revenue that's locked in. AI workflow automation could create entirely new verticals, but right now they're in verticals all across the industries, from financials to industrials. The balance sheet is rock solid. Right now, ServiceNow trades at just $802. Extreme buy right now. You can see just within the last year, they were up at $11.50. You can see the analysts have the target at $11.50. So huge discount right now. Trading at forward PE, it's kind of high, 39, but for ServiceNow and their performance numbers, very fair price. They beat earnings consistently the last 4 quarters. Revenue and earnings continuing to go and move straight up. Their growth, high double digit, 17% growth over the next year. Now, if we go to the platform, now on the Tasty Trade trading platform, you can see I've got 3 put credit spreads on in ServiceNow. So if you go to the trade mode, here's what I really like about the platform. You can go to curve mode, analysis, and you can see the profit zone. We're trading at 802 right now. I'm a little bit in the money right now, so I needed to move up to that 820 range, and then I can make $1,500. P&L at expiration 1526. But if it's not there, which I think it will be, but you never know what the market's going to do, then once I get to 15 to 20 days to expiration from this 50, I just roll to the next month, and likely I can collect a additional credit as well. So that's what I like about the put credit spreads. And they require much less capital. If I were to put one on right now, go to the trade page, go to January, I'd go right at the money since it's had a drop and it's 800, it's so low. do the 800, 790. You can collect $5. The market's closed right now, so the spreads are wide. So most likely we're going to get traded, get filled at around 330, 340 when the market opens. But that's what I want to collect, is a third the width of the strike. So you review and send, place the trade. All right, guys. So out of these three stocks, AMD, PayPal, and ServiceNow, which one do you think is the most undervalued and best buy right now? Let me know in the comments below. Be sure and like and subscribe. Download the free options workshop in the link below. Join the free Discord and see all my trades. If you like this video, watch this next one.